I've been debating how to report each week since we're in the difficult intersection in the market. On the one hand, interest rates have spiked to their highest point in years. Prices and demand must react to that, right? On the other hand, we've had the most intense buyer competition in decades. So there's so much momentum and cash ready to deploy that we're simultaneously hitting new record home prices each week. So is this a bull market or a bear market? Are these buyer opportunities or seller opportunities? So let's walk through the data, and maybe together we can arrive at the best way to describe this market. Each week, Altos Research tracks every home for sale in the country. We track and analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. I'm Mike Simonsen. I'm the CEO of Altos Research. Let's see the details for the week of April 11th, 2022. The median price of single-family homes in the U.S. jumped this week to $415,000. That's up over 1% from last week and 10% from last year. It's April, and home prices surge in the second quarter every year to reach their market peak in high summer. So in that sense, the fact that home prices are surging isn't surprising. Prices move like this every year. So we have 10 more weeks of rising prices. We'll likely peak out around 440,000 by the midsummer, even as mortgage rates are higher. So that'll keep us probably about a 10% year-over-year home price gain from last year. You can see in the dark red line here, we have a few months more to go before we hit that summer plateau of home prices. Now, I only have anecdotes about it, but there seems to be a lot of buyers with cash who are waiting on the sidelines right now. They want to avoid the hyper competition, the bidding wars that we've had for like 18 months. And that may be a good strategy. But one other implication of that phenomenon is that we may have enough buyers waiting for opportunities that as soon as any opportunity arises, maybe more inventory or softer prices, that those buyers are ready to pounce. And that is one way in which any coming softer real estate market may actually be tempered, whether it's like from recession or higher rates. The downside would be tempered from these buyers waiting. You can see in the dark red line here, for the 3 weeks of down market we had in April 2020. We had 3 weeks of price declines before people stepped in for the deals. And this happened despite the fact that the economy was tanking, and it was well before any stimulus hit. These were buyers who were waiting, and they put a 3-week floor on any real estate market crash at the time. Something to look for in later this year and in next year as well. The light red line here, the leading indicator, the price of new listings, stepped down this week to $410,000. Normally by April, the new listings have settled into their plateau, which previews the plateau for the whole market, which happens later in the year. Right now, the new listings prices are staying actually very elevated. If you're looking for signs of a cooling market, the price of the new listings is one of our leading indicators. If I'm going to list my house for sale, I start to look at the neighbors, and I will take a little discount when I see that the neighbor's house didn't get any offers. But if I know there were 50 bidders, I don't drop my price just because mortgage rates are rising. I use the actual data I can see. So as the market slows, one way to observe will be to watch the light red line on this chart. As of right now, pricing hasn't slowed at all. The available inventory of unsold single-family homes is rising each week now. It's not spiking or surging, but we're up to 261,000 single family homes unsold on the market. That's an increase of 2.3% from last week and 5% higher than the lowest point ever a month ago. The curve here is lower than last year, but actually trending up earlier. So that's encouraging for those buyers who are waiting for that opportunity later in the year. A little bit more inventory coming. Incidentally, this week, Thursday, we have our monthly webinar, April 14th, 10 a.m. Pacific. We'll spend an hour diving into all the details, including our latest inventory forecast for the rest of 2022. And we'll spend time on these leading indicators. We'll look at local markets and preview some actually cool new things coming from Altos Research. There's a link to register for the webinar in the description below. We'll have 600 or 700 people on that signed up for that webinar, and you should join us too. The nice thing about the live environment is that you can ask questions about the data with me and the Altos team right there to answer. If you've been paying attention, you'll know that our immediate sales tracker is one of the other leading indicators I keep a close eye on each week. We've had such intense buyer demand that the bidding wars and these homes are selling immediately, essentially hours or with days of listing. As demand cools later this year, we'll expect to see more inventory and fewer immediate sales. This week, 26,000 homes got listed and went into contract essentially immediately. That's the light red portion of the bar here. That's 29% of the new listings. It's a ton, but it's actually the lowest percentage of new listings sold immediately since New Year's. Relatively fewer. So, is that the first signs of a trend? That's what we're watching each week. One other notable thing on this chart here is that we are running slightly behind last year's levels of record home sales. And that's a little bit of demand, but mostly that's because we have an even more dire supply constraint than we did even last year. So you can't buy what's not there. So something to keep an eye on there too, total volume. Down a little bit from last year. All right, here's the third leading indicator for the day. We'll hit more of these in the webinar and in more detail on Thursday. But real quickly here, the price reductions, the percent of homes on the market that have taken a price cut recently. Slightly more price reductions than last year. You can see the dark red line ticking up each week. There are now 17.5% of the homes on the market that have taken a price cut. Normally, we'd expect that to be 25 to 30% of the market with price cuts right now. So you can see how the dark red line is trending above last year. Let's see if price reductions climb over 25, 30% later in the year. If you're interested in home sales prices, the transactions, you can use this chart to see the trend in the transactions that will happen in the future. And asking price cuts now imply lower transaction prices later. Okay, that's all the data we have time for this week. As you can see, the higher rates haven't deterred any buyers yet, but we do have the leading indicators to study for what to expect later in the year. Stay tuned to the YouTube channel each week to watch for the signals. We'll report them here before you can see it in any of the traditional channels. As always, this market is nuts, and your clients are probably scared. So they need to know what's going on. To get them your Altos data now, go to altosresearch.com and book time with our team for your local market consult. You look at your local data and how to get that to your clients right now. This week, Thursday, April 14th, 10 a.m. Pacific, is the webinar. We dive into all the details. There's a link for that webinar in the description below. Click that to join us. These are widely attended, so book your spot and make sure you know what's happening, everything right now. All right, everybody, that's all for this week. Thank you. See you Thursday. More next week.